What's happening, people? What is happening? Hasim, how's it going, brother? Grace, OS, Omer, what's up, brother? A few minutes while people were getting on. How's everybody doing? How was your week? How is everything so far? How are you feeling? All right. Well, market review, price action, and psychology. Just a little bit about everything. 2 minutes while more people get on. I've been good. I've been good. A little bit anxious and somewhat honestly confused, The market isn't perfect all the time and you don't get it right most when your timing is off, you're off and you have to come back and readapt. So this week we had an idea that didn't play out, and I'll show you in a second. We had to switch to sell to a selling scenario, bearish scenario, and so far it's okay, but I'm feeling sad that gold isn't going higher. Appreciate it, Grace. Awesome. All right. Well, for anybody who is new and sees this eventually, like, subscribe. I'm not a YouTuber, but I have to say that just in case. Let's get straight to the charts. And as I am talking to you, if you have any questions, use the chat. And I'll try my best to answer everybody's concerns, ideas, whatever. But basically, a quick market review of what we're looking at is clearly a ranging market. And just when you think that price might continue the bullish, general trend of the market, then you have a reversal and you have to adapt. This is one of the projections that was sent on the Discord from this point in which we tried to buy. Where is this? Here it is. We tried to buy from here where there was a V-shaped structure, and it seemed that it was going to hold because we had this trend line coming up and it bounced right on this level where it basically balanced this push up. So it was it wasn't a bad level to buy. What happened that obviously this candle violated the V and it showed evidence of wanting to trade lower. So at this point where you see this red arrow is where I updated the idea of wanting to buy, and basically through these lines or these areas where it was a critical low, obviously these equal lows, we have this low, this area below these low, all the liquidity that the market is basically reaching towards. And then you have these lows, and on the left you have another low that's equal to this one. And so as price takes previous lows, it targets the next and the next and the next. But I want to go over this market structure and the price action in it for future behavior that might look the same, might look similar. You are always learning in this process, and not every day is going to be the same. Not every year is going to be the same. Not every month is going to be the same. And despite July being historical bullish, we are looking at evidence that obviously is not going to be exactly like that all the time. If it was that easy, obviously everybody would be a millionaire. Now, where I think it is our job as the best traders we can be is to adapt, right? And work as much as we can on changing or basically adapting to the market. And this is where psychology comes into play, where we want to do our best in, how do I say this? Not sticking to a belief and not falling victims of an idea, right? Which is very hard to do because it's ironic that you also want to trust yourself. You also want, you have this knowledge and you have technical basis, and there are certain behaviors that quote unquote should play out. And so you want to, you're basically betting on that scenario. And so realizing when it's not the case and changing your idea is a skill. I think it takes time to, I guess, convince yourself that you were wrong and change your game. Right? It's hard, it's not easy, but it's possible. If you're in the Discord, you saw how we tried buying here on the V. It did obviously give this push up. If I go in the 1 hour time frame, you'll see the structure. This push up is the one we thought it was gonna reach at least to 3,400, and then this drop, I think it would have made more sense. But again, notice how I'm saying I thought, and it didn't happen that way. When the drop came, that's when we flipped and we said, okay, this is not, we're going to go longer, down for longer. So flipping, Discord is free. It is free, and there's a VIP also. So there's a private section of the Discord, which, by the way, you remind me, and I forgot to say that I'm making an offer for everybody who's in this live for precisely the VIP and the blueprint. So I'm gonna make I'm gonna pin this message because I want to offer you guys, whoever is new or doesn't have the blueprint or isn't in the VIP, I want to offer you guys something special. So in the VIP, and yes, I think I shared that in the free version was, okay, this wasn't the V we were expecting. We're changing into a bearish direction and a bearish trend. The bearish structure is holding, is still breaking lower. So let's follow the trend. The trend is your friend. We're gonna sell, right? And projected price right to this area. Okay, and then an extended one that I also sent, I think it was today or yesterday. I think it was today, with a potential extended drop after Fed rates and NFP. So this is where adapting is key, and I personally don't like it. If let's talk about this honestly and sincerely. There are things that are not fun, and nobody likes to be wrong. I think it's uncomfortable to find yourself in a situation where you think you have it and you don't. And so there comes a time in which you have to decide what to do, whether to think it's maybe a manipulation that is happening and you're on the right side of the market, but you probably didn't time it right. And so just let it, don't touch it, see what happens. That's I guess thought one. The thought two is, okay, it's coming back against me. Let's say, you're not losing necessarily, but the market is not really executing the way you were projecting it. So you ask yourself, okay, so it's coming back. Should I just close? Should I just let it run? Is this gonna maybe flip? Right? The third, I guess, would be if you're losing and you're thinking, what should I do? Should I just close everything? Should I wait? It hasn't reached my stop loss. If it reaches your stop loss and you're like, crap, I have to get it back, or I want to get it back, that's that's a big no, but it happens. It haunts you. And I think it never will stop, and it's a matter of discipline and self-control, which never ends. So I think, based on what I've lived myself, what I've experienced, your intuition is, I think, is something that many people, it's underrated. I think a lot of people probably don't talk about it too much, or I guess they might not think it's useful, but you do sometimes get this feeling in you, and that's going to allow you to flip out of an idea that you have and work on it, practice, try it. Believe me, trust me, if you're in a demo or a real account and a trade is going your way and you start getting this weird feeling, or somehow you just say, should I close now? I'm not sure if it's, whatever the question is that comes in your mind, try it, really make the effort to pause and think about it again, and ask yourself, why would I ask myself that? And here's where I personally have found that this whole spirituality thing plays an important role. And it's not just in trading, like, it's everything. We are energy, we are a spiritual being, and we are powerful. We have magic within us, which is, we think something and we can create it. And on that line, right, on that subject, and within that world of spiritualness and the mind, the intuition aspect of things, I have experienced interesting things. Is not, sometimes, for example, my exits on trades are great. The take profits levels I set, not just in my personal trades, but on the signals I send. I have to admit, most are very intuitive things. Like, I sort of see the chart and I try and visualize what it would look like if the trade that I'm in, how the candles will look like, obviously based on previous structure. Like, yes, market goes to previous highs and previous lows, but it doesn't go straight there, and it's not guaranteed. So how do you make sure to get money out of the table and enough of it, right? So I go with the flow of what my thoughts are in the moment, right? Like, if I buy and I say I think it's gonna come up to that candle, I just go for it. I put my take profit there and I wait and see. That's the 50% Fibonacci. That is the previous low. There's an imbalance. Whatever the technicals, it doesn't matter. Like, I'm always trying my best to listen to the voice first, the intuition. And the reason I start talking about this, and I mentioned the whole spirituality thing, is when you get better and better at listening to that voice, sort of, you are able to disconnect yourself from the drug-like mechanics of the market. The market is always right, just need to go with the market. Yes, of course, you go with the market. That's, and price action. That's why, price action is king. Price action is all you need. If you clearly see something that's not, it goes against your idea, you listen to the market. The market is the boss, not you. You don't control the market. The market just is what it is. Now, the thing that most people don't talk about, or I haven't personally really heard anybody who has a YouTube channel or is trying to teach someone else, what I haven't heard is, how do you adapt to the market? Because people can fucking pray that, cause they say all the time, just follow the market, like, go with the market. Okay, go, do it. Like, it's not easy. It's not, because we're human. We don't like to be wrong. We have, we can be greedy. We can be blinded. If we're on a winning trade and there is a signal that market might want to reverse, or it's potentially going to reverse. It's happened to me. It's happened to anybody. Those red flags or those signals will be ignored. Obviously not every single time, but it happens. And so that process of, okay, go with the market, follow the market, listen to the market, versus trust yourself. You know what you're doing. You're good at what you're doing. There's a big dilemma there, and it's what I call one of the ironies of trading, which is, I'll write it down over here. Trusting yourself and market structure. Because here's the thing. Depending on what time frame you're in, depending on the time of day you're trading, the session you're in, New York can be, New York can really confuse people. It could shake you off and it'll flip. And so market structure isn't always clear until like a bigger time frame, like the 4 hour. And so in the 15-minute, you have a roller coaster that is really getting in your head. So it's ironic that you want to trust yourself, but at the same time, you have to listen to the market. And sometimes by trusting yourself, the market is in your favor. So, and it's, man, I even struggle to continue to develop this idea because it's not simple. It's not a simple thing. I mean, look, some people might find it a bit easier, I guess, or, but if you have this, if you experience this, if you have this struggle, then it's a thing. And anybody out there who's like showing off their very extremely successful lifestyle, I don't know. You have to think, everybody's human. It's, yes, this is simple. This is very easy. I have a system. The system works. People who are in the Discord, they, you know what it is. What happens is, in times like these, or any time, really, honestly, just any moment when you're trading, and you're going to find yourself with a few ironies of trading. This is one, trusting yourself versus like, okay, following market structure. And to what point is it wise? Up to what point are you just self-sabotaging your process? Because I've had experiences, I've had trades where I'm winning and I could get out. I don't get out, and then the market just gets back, and my take profit is a bit far or whatever, and then you later say, man, I should have, right? I could have, I would have. Obviously that's very, I think, and I always try and tell people, don't, that's you're damaging yourself if you say I would have, I could have. It's in the past. There's nothing you can do. And so really what one must, quote unquote, do is follow a few simple rules. These are my rules. These are the rules I think are these are key rules for you to also have if you want to write them down. But basically, rule number 1 is secure profits. This will prevent any would have, could have, should have. Just if you have profits and you're well above your goal or your daily objective, just close the trade. It doesn't matter if your take profit is 10 pips away, if it's whatever. Yes, there is a trusting process. You went through the trusting process when you executed the trade because you trusted yourself that you had the analysis correct. You're winning. Secure it. Period. Trusting yourself doesn't go beyond to the point where it's a gamble. Secure profits. The rule number 2 is hunter. So be the hunter, not the hunted. And that is be patient. Don't follow the market. Don't chase price. Let it reach an area. Let it show rejection somewhere, specifically during a key time, especially during New York. And some might know, if you have the blueprint, I have a plan there for you, and I tell you the times that are best to trade, in which you're going to wait to see what happens. Rule number 3 is, so secure profits, be the hunter, not the hunted. The trend is your friend. The trend is your friend. Period. If you're lost, if you're not sure maybe what might happen, zoom out. And so that's also a saying, I think you've probably heard of this. When in doubt, zoom out. And essentially that means the trend is your friend. Like, get out of the 5-minute time frame, get out of the 1-minute time frame, even the 15-minute time frame, go to the 1 hour, the 4 hour, and see where price has rejected, where it has bounced. Did it bounce before reaching a low? Did it reverse before reaching a high? If so, that previous high has not been taken. Therefore, it might be a target, because normally price would not reverse before taking a high or a low. So if you see this, right, the market it already made up, it made a swing down. If we're coming back up and price is coming very close to this high and it starts reversing, it's, first of all, this is not an ideal situation, because here at this point in this specific scenario, and obviously we could look at a chart, but we'll find something very similar. If you have a high that hasn't really gotten taken, or let's put this here. If you have this situation, it's likely that price is gonna manipulate this high to take this one, because that's what happens in the market. That's how it behaves, that's how it moves, that's how it flows. It goes from internal liquidity to external liquidity. This is external in relation to this because it's above it. It's outside of its range, of this range, right? And once it trades above this previous higher high, then if we see a reversal closing back below those levels, that is a safe short trade opportunity. okay, because it took out this high, and it's closing back below them, right? And if this happens, on top of everything, if it aligns with time, the hour of the day, it's yet another factor to add probabilities or edge to your favor, or probabilities to your edge. Yep. So what happens? This is what would be ideal for a short in this, little example. But the reason I say it's not so smart to trade this is because this could also very well come back down, and just before reaching this low, it'll reverse quickly. And that happens because there has to be an internal liquidity range, which is this one, this high and this low, in regards to this high and this low. Okay? And this happens especially in a consolidated market, in a ranging market. Let's say in a week where it goes up and down, or even in a month like we've seen in gold. It goes up, it goes back down, back up, back down. Okay? Obviously these are little shorter term bear trends and bull trends, uptrend, downtrend. But the general market structure, if you zoom out and you see this, then you can have a more clear path, right, so to speak. So going back to our little drawing here, it's best if you zoom out and you see the 4-hour time frame looking like this. Sometimes you can miss opportunities that are good, and they present themselves once a while. Just adapt. I favor more the adapting mindset instead of just simply saying, oh, I'm not going to trade just because I want to be so strict on these rules. That's another irony of trading. It's ironic. Are we gonna be extremely strict? To what degree can we take advantage of a push if we know a specific setup and we see it? If we have a system, if we have an edge on the market, if things are aligning, if my risk management is set, if I choose, is it wrong to take a short-term trade? Is it scalping? That depends on you. That I will say. If you have the personality, if you have the character to say, okay, I'll take this trade, but if I lose, I'm gonna wait for my trading window of opportunity, right? If I don't have a window of opportunity and I'm just flowing in and out of the market, if it works, go ahead, do it. And so having these strict rules, just because you see someone else say it or they talk about it, right, and they say you have to have a plan, like that's very strict and you have to be super. Man, I've made money honestly from like a pool from my phone. Is that wrong? Well, it's ironic. It can be. If I think it is, it might will be. Right? If I'm trying to be a disciplined person and I really want to say I don't trade if it's not between 9 and 11, period. Okay, if you want to do that, do it. Again, that depends on you. If you lack discipline, then obviously looking at your phone all the time is not going to help you develop the discipline that you might seek. Where do I think that's important? On the self-control aspect. Before I get into that, I'm going to finish the 5 rules. The trend is your friend, accept losses, and eliminate emotions. If you want to have those around, be my guest. They help me a lot. Self-control and discipline. So, okay. The discipline that it takes to get up in the morning, to go to work maybe, or to the gym, to make your bed, to clean your house, to behave well, right? The constant conscious decision to be disciplined in some aspects of your life translate and reflect into your trading behavior patterns and decisions. If you tend to be a disorganized person and very spontaneous, you might also be such in the market, where you're probably executing a trade just because you feel right. And you're putting your stop loss because it kind of feels like it could respect this level, and it's $20. Okay, fine, it's $20. And that might work, but you'll have to really study the long term and if that is a sustainable approach. Right? Because that's very and almost 100% intuitive and emotion-like trading, because you have the emotion based on a thought. Because you have a thought, you have the idea, oh, I think it's going to go up. When you think that, you're generating this emotion within you that you can make money. So you start incrementing your dopamine levels in the brain. You're envisioning yourself winning money. You're looking at the potential move and you're like, oh, that looks tempting. If I go 0.5, that's like $300 easy. How exciting is that? Like, really, honestly. And we are human, so that is a line of thought people have. It's actually the process of executing a trade, because you're looking at price, you're measuring, you're anticipating, you're calculating, you're making your decision making process in which you are inevitably going to feel emotions. So it's another irony of trading, to eliminate the emotions. We are human. How can we eliminate emotions? So I write eliminate emotions, but I think it's really directly saying control emotions. Eliminate, because obviously we want to try to not feel much, but we're human, so we can't. Physically and literally and spiritually and chemically, we cannot eliminate what we feel. It's fucking impossible. What we can do is control them and try our best to not think about them. So what are you supposed to do? How the heck? Like, okay, fine, fuck. How do I trade then? So a system. What is a system? Consists of a plan. What is a plan? Okay, the blueprint. Who has the blueprint? Please type 5 if you have the blueprint. Because in the blueprint, I share a plan. I share a system. I try my best to teach you what it is. Some might know it and might be actively using it. And I'm sure you've obviously and hopefully you've adapted your personality into it and your own touch to it. But it's a very useful and accurate system for gold specifically. So in the blueprint, I talk about a plan, and that helps because if you have a structured system, you're going to be able to control yourself more because you're going to know, you're going to have clarity in the market. So I'm going to clean this a little bit, and then the reason or in other words, to respect these, right? In order to respect these, I want to have a plan, because without a plan, you can't just apply these rules. That's like saying, okay, we're going to create a nation, but before creating the nation, we're just going to create these laws. Okay, we have these laws. For what? You know, applied to who? Or applied when? So you can't have laws without a system or a society. Therefore, you cannot have rules without a plan, because what are these rules applied to? So these are to the plan, or basically those rules you're able to control these and adapt to these rules to have clarity. I want people to have the blueprint, so I'm not gonna write the plan here now. Everybody's like, oh, where's the plan? I'm not gonna give it out now. So why have clarity? With clarity, you will know what you're looking for, because you'll have a plan. You will be patient. You will control yourself better. Better. I cannot guarantee you will be able to control yourself, because that's a very personal thing, nor that you will be 100% patient. But you'll definitely be more patient when you have clarity. And how do you have clarity? When you know what you're looking for. How do you know what you're looking for? When you have a plan. The plan is in the blueprint. I'm going to basically explain, like, okay, a plan. Time. Have a schedule, literally a trading schedule, a system, and an edge. An edge can be, okay, what are you looking for? Are you a reverse trader? Are you a trend trader? Do you continue the trend? Do you like to sell or buy more? How does your mind look at price better or best? Is it easier for you to identify when price is going to drop or when it's going to go up? If you haven't asked yourself these questions, you better seriously go into the charts and look at price and study it minute by minute. And how does your mind adapt to what it's looking at? Are you able to spot better when it comes down or when it goes up? So basically, that is like focusing on your talents. You know, the educational system is a fraud because it doesn't teach based on talents. It just teaches a subject, and you better learn this subject. And if not, you're dumb. And if you don't get good grades, you're not a good student. If you're not a good student, you're not going to study in a good college. If you're going to study, you don't get money. If you're not going to get money, you're not going to be somebody in society. And all those people that think that can really, you know what I mean. Well, if society were to be a bit smarter in how it teaches, it would focus on talents and exploiting the talents of a child, of a kid, of a person. Obviously, a lot of people do that and they say, fuck everything else, I'm going to stick to what I'm good at. That's what you should be doing. And that is in your trading how it should be. Are you more skillful at short-term trading? Are you better in the 5-minute or 1-minute time frame? Who are you? What kind of person are you? All that is part of the thing, but not to get too deep into that and fade away from this topic currently. When you find what you're better at, you'll develop your own entry model or system. Sessions indicator. Yes, it's called, I'll show you in a second. It is called MKT Sessions. Where is it? Here it is. FX Market Sessions by Boytoki. That's the one I use that shows the squares for each market session. Okay, so based on your develop your own entry model. Entry model, or you could say edge, meaning the factors that you want to align in order to, right? So for example, my edge or my system has a few factors in it. It has got areas of interest, the best time frame to follow. That is a very subjective question, my friend. It's not, there's no best time frame. But I'll get into that in a second. Areas of interest, candlestick anatomy, and time. These are more like in a very general, these are my factors that determine my entry or my model, which one of them is the V shape, right? So with these factors, when it comes to areas of interest, I want to see price. I want to see how price behaves at, below, or above certain areas of interest. How am I going to study and determine the behavior based on candlestick anatomy? When? At specific time of the day. So that is how I put together these three factors or variables, right? If you know about coding, or if you understand how systems work, any system, it's conditions and variables and executions based on these conditions. So if X, then Y. If A, then B. Or else something else. Like you're putting conditions to execute, and that's how your brain works. That's how it's also how you would make decisions. So if I see this, then I'm gonna do that. If I see this and this, I'm gonna do that and this. So being very general and very sort of explaining this to a 5-year-old, that's basically it. So I want to see how the candles look like when price is near, below, or above an area of interest. What is an area of interest? An important high or low. What is an important high or low? 4-hour time frame low, a daily low, like an algorithmic price level, like the daily open, the midnight open, New York session low, a previous session low, or high, obviously. And so around those areas is where price is going to do X, is going to do A or B. What is A or B? It would consolidate and continue, or it'll reverse. Why would it consolidate and continue? Let's look at price live. Let's go to the 30-minute time frame. Here we are. Let's study like the present, which is easy and simple, and we don't have to complicate ourselves. Price is falling, is reaching these lows. If we put the sessions, we have London's low. Over here we have Tokyo. This is Monday. So this is Monday's low right here, Monday. Monday low. how does price behave around Monday low? So this is Monday low. I'm going to take this off. I'm going to take this and hide this. And I want you to focus. I want you to focus here. Right? Based on Monday's low, which is this one. Right here. So I'm going to hide this now. And we're looking at how price behaves around this level. And what do I see? This is the 30-minute time frame, by the way. So the 30-minute time frame, yes, we do see a bullish candle that is sort of saying, I want to reverse from this point. And it happens after trading below the low. So yes, that could be an interpretation that market is grabbing liquidity and is going to go up. If we go to the 15-minute time frame, obviously it starts to be interesting and tempting to buy, right? Because it's closing back above that high, the low, and it's a bullish candle. But what you want to see really is the market break the structure of bearishness. What is bearishness? The previous highs. Previous highs must be taken out and a candle must close above it. Like this one. You see this bullish candle is closing above these wicks and these candles' bodies. That is why this push had a continuation a little bit more. Obviously, it didn't go further and it stopped and then it traded back lower. But that is how you essentially find the trading opportunities when the candles are really, breaking the structure of previous candles. So what happened here? Instead of having a big bullish candle, the market just consolidated. It started going up and down, up and down, up and down. And that is not signs of reversal. This is a sign of reversal. Big volume momentum. So as you continue looking at this bearish candle, that last bearish candle right here, closing back near the lows, is a red flag, or is like a signal saying, hey, is not going to necessarily reverse. Now, I'm not saying this because it's the perfect example and it's cherry picked. That is how the market behaves. When it's going to break and continue falling or rising, it'll consolidate. In other words, I'm going to draw it right here. We have an uptrend. Let me make this a bit darker. There you go. And like this. So when price is going up and it made a pullback and it's going to continue going higher, around these areas of the previous high is going to consolidate because it's accumulating, it's creating liquidity, and then it's going to expand higher. The same thing for the downside. So let's go to other examples where price, as it reaches certain areas, how does it behave? So where am I? This is the 15-minute time frame. So this, you can say, is very close to what we were talking about right here. Look at how this price action is near this high. It is not continuing to trade into this low. It's holding, is respecting this high. You see that? This is now price action, 100%. Look at how this high is holding this low. You see that? I have recognized if price goes fast, up or down, price is likely to go back. In other words, if it goes down too fast, there are more probabilities that it'll have some degree of reversal that you can catch. Is that what you're saying? Or if it goes up too fast, there is a chance to get a reversal because it went too fast, too much. Yes. If that's what you're saying, yes. it's scary, right? Because sometimes there's your up. There's no reversal, there's your up. So you have to know when to time it, and which is difficult. But going back to the example, look at this behavior. You have this low and a higher high, this low, which is higher to this low. And so how do you know if price at this point is going to reverse or not? Right? We don't know. We don't know what's going to happen. So the way you have to study this is the previous candles. This is the key high that the market broke, and so it should hold it. Right? It should hold as price breaks previous highs. This is textbook support and resistance. As previous highs get broken, they should act as a mirror for price. So this high should be a low in the future, and it was perfectly that low right there. So when you see price do this, you can start being bullish because it's not trading back below the areas that it broke. Another way of looking at this is during a bullish move, I want to see previous bearish candles not hold price, right? I want to see bearish candles get taken out. So, in other words, in this move up, these bearish candles, the black candles in my case, I want to see them get taken out and price close above them. So above these highs, these bearish highs, you see how this bullish candle is closing above all these lows, all these highs of these bearish candles, and these bearish candles, these bullish candles are closing and taking them out, and they're closing back in their range. That's it. So as you see price over here close above these bearish candles, those are the future areas you want to focus on. And so that is how price then continues to expand higher. Now let's go back, right? Because we were talking about how do you see like the edge, right? The edge. Sorry, I got lost a little bit over here. Where am I? 4 hour. I think we were here. What chart were we on? Excuse me. Here we are. So the edge, we want to see, I was saying I want to see price behave based on candlesticks anatomy, right? This is my system. I want to see how price behaves at, below, or above certain areas of interest based on candlesticks anatomy. If price is going to reverse, then we would have to see a V shape or an A shape. And that's where I have found that is the best, or one of the best models, because it offers you a reversal. And reversals tend to be powerful because if you catch them on a trend, you're essentially getting the higher low, or respectively the lower high on a bearish trend. But basically, let's go to the uptrend. My eyes, for example, my mind sees better a V shape. I like the V shape a lot because it's in a bullish trend. When price manipulates, I want to see it reverse back, and that's when I execute and I catch the continuation. We've traded many of those in the Discord. Many of those. And so what you want to see is, instead of price consolidate around those lows, I want to see those lows get taken out and then flip hard back above them. Okay, so I'm trying to quickly look for something to show you in a bullish move. So this is one right here. This is an example. This one is also an example. 1, 2, 3, 4. If you already If you've already traded the V, you know what I'm talking about. But here it is. Look, here's where I want to show you. Take these lows right here. They're equal. Honestly, they're equal. Yes, this wick is a bit higher. No, these are equal lows. You see that? What happens here? Look at the difference between this behavior and the one we were looking at previously, bullish or bearish, regardless. If this was going to continue dropping, these bullish candles should not have traded all the way back above this area. Because look at it, look at the example here. Look at this high. You see how this low respects the high? It would have been the same thing if these lows get respected here as a high. You're just flipping it. So this didn't come lower because this previous high held as a support. Saying it, or saying another way of saying this is, these lows did not hold price because it flipped back and closed above it. So that is not a pullback. That is a reversal. That is a manipulation to grab a better entry, a better price. These are institutional orders. The algorithm pushed price to these levels to offer institutions a better entry. You happen to be there because the textbook says put your stop loss below a previous low, and psychologically you have these two lows that say, oh, that's a perfect support, that's a big area, I'm going to place my stop loss there. Institutions don't know this, but you just happen to be there. So how is this behavior different from a continuation? You have the reversal candles, meaning there's a push down. Reversal candles are going to be up candles. You have up candles that are one, big, strong. Have you heard that song? 'Cause it's big and strong. Da 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 da. Sorry, I sometimes think a lot of things at the same time. Ignore that. Big and strong candles that are closing in the opposite direction, back above or back below your area of interest. That's it. And they're closing above or below it. That's what I'm saying. So these equal lows right here. Price comes below them and then flips, and it happens quickly. That's another thing. This has to happen fast because then there wouldn't be a reversal. Okay? So the difference, again, there's a V and you catch that move. Same thing over here. If we go micro, if I zoom in and go micro here, look at these lows. The wicks of these lows. This is a 15-minute time frame. If I go to the 5-minute, it'll look very similar to this. But I don't want to switch it too much. But that's it. Look at these lows. The market comes below it and rapidly flips and closes bullish again. There is your V. Again here. These lows over here. These wicks that are equal to this wick. I'm not making this up. This is not cherry picked. This is how it is. There's always going to be very close areas of liquidity. As price closes back above it, it flips. You see that? Over here, look at these candles. The bodies of these, the lows. This wick happened to hold right there, price. But even that wick, it took it right there. And look at what happens when price flips back up. What does it respect? The previous lows. Some previous low is not perfect, but you go back and you see it. There's a V shape. There's a V structure. There's a V behavior. Up bullish trend, pullback, manipulation below lows, closing back above them, respecting those lows. You're good to go. That is the system. I've extended myself, but it's necessary so that you also see it the way I see it, and maybe it'll resonate with you. Maybe it's clicking something in your mind and your brain, and the same thing goes to the downside. The same thing goes to the downside. As you see price coming down, it'll respect previous areas that it manipulates. Right here, watch. These highs, these candles highs, as price goes above them and closes back below them, and it tries to go back up, it holds them. It holds the areas, the bodies. And most importantly, the bodies. So you see the bodies of all these candles right here. They're holding resistance. Price goes up. It hangs out a little bit here, and then it comes down. As it comes down and it breaks the bullish candles again, you see how now the bearish move is breaking below bullish candles, and it tries to go up. The previous highs should hold. Comes back down. Over here, what happened today? Look at the bodies of all these candles, these wicks, all of these highs, as the market gets near them and closes back below them, they should hold as resistance. When they do and it starts closing lower, then you have your confirmation that it's going to continue in that direction. Yes. What happened here, by the way, is very interesting because this wick did not take out that wick. So this is liquidity. Why is this liquidity? Because it's engineered liquidity. What is engineered liquidity? I'll tell you in a second. Why is this not okay, I'll just write it. There it is, liquidity. So when you have equal lows or equal highs, it's engineered liquidity. And I think there was a video I posted on YouTube on one of the VIP analysis I made, and I mentioned the equal lows. I talked about equal lows and I talked about equal highs, and as price gets very close to a high and it leaves a very equal high or low, it'll use it in the future. Here the market proves this. Check this out. Check this low and this low. The market comes down here. Low, low, equal, exact. It goes up to manipulate these highs. And what are these highs? Equal. Look at these equal highs. Wick, wick, wick. Before this, you didn't see any of that. These were equal highs, relative equal highs. The market comes down. It leaves relative equal lows. Where does it target? The relative equal highs. What happens then? It reverses to take the relative equal lows. That is engineered liquidity. That's algorithmic. Okay? Over here, equal lows. This low, this low. What is below these lows? Imbalance. This is the 30-minute time frame, but the 1 hour, there's a little fair value gap there. There's a little fair value gap there. So all this is a big push up that hasn't had selling, or basically short and sell balance efficiency, so to speak. And so these equal lows in the future become a target. And look what's on the right to that low. It's not a coincidence. Price doesn't just get there and people decide to buy there. It's algorithmic. So these are there for a future like this one. It goes and it trades through them. And that's where price can reverse. And that's where I found a system that if you have these equal lows or equal highs and you see price get there, how does it behave? Does it stop or does it reverse? You see, I hope things are clicking for many of you, and so you could start implementing this. But again, right now, these highs, these very equal highs, believe me, it's gonna get there at some point. Okay, at some point. Right now, we're starting to see sort of like a pause, a rejection, but it's not a reversal. First of all, the market already closed. The daily candle is mega bearish, and I don't think this is gonna reverse tomorrow. But it might. It might, being Thursday. Thursday tends to be there might be a classic reversal Thursday. It's called, what's his name? ICT teaches this, and he names different days for the week, and some Thursdays reverse a portion of the week, not the whole week, or Fridays. If it were to be tomorrow, you know how this works. The ranges of the highs and lows of previous days are interest areas. Those are areas of liquidity. So the next candle, if it goes up, is going to target the previous areas, right? The previous candles, lows, highs, opened, etc. What happened? We haven't gotten to these equal lows over here. You see that? I think that's where this week's target is. Okay, so I think the next daily candle of tomorrow, if it does make an attempt to go up a little bit, I don't think it's gonna go too high, and it'll actually continue. I wouldn't be surprised if tonight the market opens with a gap to the downside, because it's been coming down very strongly. So, the blueprint has no videos, my friend. No, it does not. As a matter of fact, most of my videos on YouTube that are free and there are, when you get the blueprint, you'll understand a lot of the topics of conversation. And the blueprint is also going to click. It'll be like, oh, I get this now. Because you hear me also interpret the market in the videos of my YouTube channel. So going back to this, you see how in the little time frames that I've shown you right here, these equal lows, equal highs, this is the same thing, just in the bigger time frame of the daily. There are those equal lows. So look at this bearish candle. Strong bearish candle with no wick, almost no wick at the bottom, meaning there's no rejection yet. So the next candle is likely to target these lows, and then you might see a reversal, right? Something like I basically have in this projection that it's on the Discord, depending on how far it extends below these lows. It could go by a tick, it could go all the way through, because we have a few things here that I want to show. This is the ICMarkets trading view chart. I trade with ICMarkets and Vantage, and they have different candles in the 4 hours. So you want to double check your broker and your MT5 platform, how it's showing candles around here. But in my case, I see a gap that has not been closed in ICMarkets, and an imbalance right here below these lows, and that tends to be a big magnet for the market. So this is the first strong area of interest, right? And the gap itself, because this candle did not touch with these candles. If in your broker you do see a wick closing, what you might not see is the bodies of the candles closing the gap. If you don't see a gap, you might see the imbalance. And so to make things simpler, all of this is a big area of interest because it is below these equal lows. That is key. The fact that there are equal lows. Okay, so going back, we see price coming down strongly. No rejection yet. How would the next day candle look like? Right? That is the thought process and how I start. That's how we could start anticipating. Well, what do we see? Okay. So I'm going to clean the chart a little bit. I'm going to hide these rectangles to allow you to visualize things better. So as we see price coming down, we need to see obviously imbalance areas. You know the drill, areas where the market might want to go and sort of balance. We see this wick that got respected. And so this is the 1 hour, right? We have a big imbalance in the 1 hour. Okay? So listen to this. This is nice. I like to talk about this because this is how you start creating your, how do I say this, like your road map, I guess. So how do I make the analysis? How do I make these projections? Well, just like this. I see in the 1 hour we're coming down. I have this imbalance. So what do I want to look at? I want to see how price behaves within this imbalance. The candles, right? What else do I have? I have these candles highs. What are candles highs in a bearish trend? Liquidity. Why? Because as people are selling, they're placing their stop loss above those highs. Right there. If somebody's holding a short trade, that's their trade right now. Maybe their stop loss is now lowered, right? Maybe somebody said, okay, I don't want to leave the stop loss above that high. I want to put it down. Well, there's a stop loss. That's an order. That's liquidity. So as price comes down, it builds up liquidity. And so you will have a retest. You will have a pullback. And so now your job is to predict up to where that pullback is going to get. And what areas could respect, right? Initially, the imbalance. But you could also use a Fibonacci. You use the push down and you measure if the 50% makes sense. Where is the 61, which is a key area? Now, watch something interesting here. Notice how from the initial drop, which is here, to the bottom of the candlesticks, the bodies, notice how the 61% retracement and the 67 match almost perfectly this imbalance right here. This little fair value gap, as Mr. ICT calls it. And what's interesting about that is that it's right above these candles high. So a probable move could be that price comes back into these highs, touches this liquidity, imbalance right here, which also matches the bodies of these lows. And right around here, you could see then a reversal to continue dropping, right? Something like that. If this imbalance right here does not show a reversal, okay, but I like this setup. I like this projection because I think it might do it tomorrow, from the opening till tomorrow, and you will see a reversal. Now, if we go to lower time frames, the 30-minute might also hold. You know, we don't have to. This is idea one, right? You also got to focus on the 50% candle price tends to respect it. Exactly. So this is if price manipulates these highs and goes into that sort of golden ratio of the Fibonacci tool. But the 50%, as Omer says correctly, yes, this 50% level right there could also hold price. So that would, you would have the, obviously would have to see how price behaves there. What I wanted to show you is now this 30-minute imbalance. If we see in the 15-minute we start continuing to make these imbalances, I know there's a lot of rectangles, but what I'm doing is I'm drawing FVG over FVG, fair value gap, fair value gap. I'm continuing going in lower time frames, lower time frames, lower time frames, and I'm creating sort of where the price has been overlapping. So this, I think, is the 30-minute imbalance, has this 15-minute imbalance, it's got these 5-minute imbalances, and this one specifically is the one that is overlapping in all of them, right? This one right here. So this is the one where I would initially think could hold. So to me, this would be a first selling area, right? Which is just before this low. So the same thing, as price respects the previous highs and lows as it breaks them, this is a low. If price closes back up here, it might be trying to flip. So if this is going to continue, initially it should, quote unquote, should hold this low as a resistance, right? Classic support and resistance. So this is my first initial area of interest. So what do I want to do now? What I want to do now is, okay, when price is around here in the 1 minute time frame, I would like to see, first of all, when is price gonna get there? If it's Asian session, I'm a little skeptical, because London likes to manipulate the Asian range. So if I see Asia coming up here and prices around here, I might not buy it yet, like buy the idea that it's gonna reverse to the downside, because London would come in and do something like this. Okay, if I see London, right, if I see Asia down here and then London doing this and London selling strong at 6 in the morning, I gave you money for free right there. If I see London manipulating Asia's high, and by 6 in the morning, between 5:45 and 7, so 6 to 7, if London shorts between 6 and 6:30, sometimes up to 7, but usually by 6 in the morning they're already reversing. So that is another time, that's a time factor aligning with price action and market structure. So if I see London coming into the selling area and it's 6 in the morning, and at 6 in the morning it starts coming down hard, it starts to add probability for a potential short trade, because Asia got manipulated, so London grabbed liquidity, and so you have an Asian range, which is a consolidation. You know what I'm going to say, AMD, accumulation, manipulation, distribution. So you have Asia's accumulation, London's manipulation, and you would have New York's distribution. All the factors lining up, right? And this same model right here is what I would wait to see where it forms. Again, this could be shifted. This that I'm showing you right now could be shifted a little bit higher if price goes higher tomorrow when it opens. If it does go higher, because I also mentioned that it could open to the downside, which is also probable because you have this accumulation here. It might do this little up high and then fall quickly. But, you know, it's hard to predict, obviously. I'm just sort of showing the different scenarios. If this obviously opens to the downside, it could just go straight down here and then reverse, right? But I'm not sure what's going to happen. What I was saying is that if Asia keeps going higher and higher and higher, then obviously it'll just be shifted higher. You know, and if Asia keeps going higher, then we might not get a reversal that quickly. But anyway, I was going back and sort of showing you what I did, right? So 1 hour time frame, that's how I started to narrowing down into the lower time frames to fully see where I would want to see price do something, right? And then my target, we know, would be these previous lows over here initially. Like, it'll be an interesting selling opportunity if we see this behavior, because price is going to continue coming down until it doesn't. Somebody asked a question. Hold on. Could you please break down a bit more about market exits? I don't know if Joe 88 is still around, but I had that question in the back of my mind. So market exits, I would say number one, have a goal set. Like, period. Don't focus initially on where you think price might go to. Just aim at, I don't know, 20 pips, 50 pips, whatever that is, or 1%, 2% of your money, or $100. Focus on trying to achieve that and finish your trading. Even if whatever, like, what hasn't happened, you don't know. It hasn't happened. But what you do know is how much you have currently opened in your position. Yeah, so if you know if you're aiming at $100 and you have 80, well, you better start managing your trade. You better start, like, taking action, whether that is lowering your stop loss or raising it, depending if you're buy or short, buying or selling, to protect yourself, right? If you're already $80 into your 100 daily goal, well, put the stop loss at break even so that at least you don't make a step backwards. Or you could also say, well, I'm just going to close it. Like, I'm $20 away from my goal. The longer you're in the market, the more risk you take in being manipulated or in being wrong. So the quicker you make your money, the better. Because we also want to do this to be free, right? We don't want to be slaves of this. So anyway, the market is about to open in 2 minutes, so we might see this live. And I was gonna add to that question on exits. Okay, as you work on reaching those goals of $100 a day or $200, whatever that is, 1%, whatever. When you get good at that, then you can be creative and say, okay, I'm gonna open 2 trades, 2 positions. I already have enough capital to make 2 positions. One, I'm going to execute it at the goal. So one of those trades, when I make 100 on it, I'll close it. What am I going to do with the other one? What I think I could do. Oh, I just have a feeling it's going to go higher. Okay. Go ahead, try it. Practice. You allow yourself to follow your intuition, because if you made your goal, who says it's wrong? Just make sure you don't lose some of that again, right? But that's how you could start being creative with your exits. Like, okay, I made my goal, or I made half of it with one trade. How about I let the other one run? I'll put a take profit at a level I think is going to hit, and then I'm going to walk away. I'm going to trust the idea to see what happens. And it might work. If it doesn't, just be responsible and know you chose that. If is it gonna suck? Maybe if you lose a lot or if you lose what you made. Will it be frustrating? Yes, because you're probably gonna say, oh, I should have stuck to my rules. I should have closed when I got the goal. So ironies of trading. It's ironic, isn't it? Right? I have a goal. Oh, but I have a take profit. Oh, I should have this. I would have that. That's the hard part. That's the frustrating part. That's the annoying part. All right. Any questions, my people? Any questions so far? Um, to everybody who's been around, sticking here, I thank you. I obviously appreciate everybody. Subscribe and like and share, whatever, blah, blah, blah. You get the point. And I will make now the special offer and announcement I wanted to make, which is in regards to the VIP Discord, where I show my trades, opportunities, my setups, my projections, and the blueprint. So if you have any questions, let me know, and I'll share with you something real quick. So offer number 1. You're welcome, Omer. Is for the VIP membership. So you know, if you know, and if you don't, I'll tell you, I have a 1-year membership offer for $200. So today's offer for anybody who's in the video or in the session right now in the stream would be for a lifetime. So lifetime access. Okay. So $200, you'll be in the VIP for life. And the offer number 2 is get the blueprint. If you don't have it, for the lowest price, which is the VIP, the members of the VIP got it for, I think it was 25. Omer, was it 25 or 29? I forget. So the member, yeah, 25. Okay, thank you. So $25. It is currently at 45, and there's, I think, 13 copies left, and I'm going to increase the price because it's worth it, and I know it's going to change a lot of lives. I'm going to show real quick the blueprints, some of the topics. If some of you don't have it, of course, I will show you some of it so that you know what you're getting. I don't want anybody to feel like this is some sort of fraud or scam or is not, you know, what you might get. But this is the blueprint right here. So I have an awesome disclaimer. You're getting the trading plan for New York, different scenarios and setups based on time, price action and candlestick anatomy, a section where I, you know, just explain the basics of how you want to see candlestick behavior. The entry models, A, V, and A shapes that I went over this stream in a period of minutes. Structural models. These are some behaviors I've seen repeat that I've named the funnel and the ping pong. It's how my brain sees it, it's how I interpret it, and it's how I show it to you. If you resonate with it, if your mind sees it, you're gonna use it. You're gonna like it. And these are the last two sections that I think are gonna be great. Well, everything is great, honestly, but reprogramming your mind, your body, and your soul. There's a cool and a very effective exercise you can start doing to changing how you think and reprogramming your mind. And lastly, a workout routine. I am a certified personal trainer. I am a bodybuilder. I used to compete. I competed for 5 years. I know what I'm doing in this area. So you can bet it is a very professional workout routine. I'll show it to you at the end. The book is 50 something pages. Here is your workout routine. It's an awesome day 1, day 2 workout routine. I called it the trader's workout. So I want you all to be successful. I want you to know the things I know and try to use them the best way possible. The quick question by Simons is, what do you get with $200? Okay, let me show you. This is the Discord. And in the Discord, the free users can only see the day trading and members area. And there's a whole section called VIP floor, which has all these channels. And VIP signals, which are updated by the minute. As I see something, I send the signal. I show what I would like to see, and as it happens, I update everybody so that they're on the same page. As I see a behavior, I start anticipating it. So right here, for example, this 17th of July, I sent this initial projection, sent the signal, 4-hour close bearish with strength. There's room for a continuation. I'm constantly keeping people up to date to see potential reversals or see if the trade might change. So I'm obviously always keeping people updated by the minute. The VIP setups are more not a signal, but a projection that I think is going to hold and is got potential. So this is where I was explaining in the beginning of the stream, the V shape that we thought was going to be the bottom. It offered us a nice move, and then here it didn't hold. So I said bearish pressure remains. We have to adapt. The V shape did not hold, so this is now a potential sell opportunity, which took us all the way to today, right? We see price already at 3270. So this was a nice setup. So as you see, you get awesome setups. Video analysis. This is a great I think you're gonna like this. Also, I try to send a video every day, but I like to do this when I know it's gonna be a nice projection. I don't send them every day because not every day I know exactly what might happen, or I don't have a very clear projection, but I'm sending daily video outlooks explaining what I think is going to happen so that you are also on the same page, and you can also anticipate what a probable signal of mine would be, right? Because you have the video, you have the setup, and so you can see me coming, so to speak. Then you have this analysis chat where I just send general ideas of what I think might happen. It's not necessarily a setup, but it'll also be helpful for you. Trading models, a little bit of insider information, and then these public chats to have a conversation with everybody in it. And lastly, the gems. This is a channel focused only on personal growth and trading psychology. I have a bunch of voice notes talking about spirituality, motivation, and a few other little things that you might want to look at. Okay, so that is a VIP. And yes, So year on year, 1,200, because brother, this is gonna transform your life. And what I'm offering is a $200 for a 1 year, but being on the live stream, lifetime access. So anybody who's in currently, just either contact me on Discord or Instagram, however you found me, and I will give you lifetime access for $200 just for being in the live stream today. And yes, that is the highest package. Video courses. There isn't like a video course because my YouTube has most of the video courses I would create. But what I do sometimes, we do, not all the time, is not frequent, but I do have schedule available for having a call with you. Sometimes I do like a little private Discord live, and the guys in the VIP, they connect and we talk about anything, maybe the market or whatever. But because I have these daily video projections, you see so this right here, I think this would be very similar to what you're thinking of video courses, because it's not like a course specifically, but it's just how I interpret the market and the projections I'm making. And so it's going to help you. It's going to teach you also the principles of price action. So it's like a big learning machine. You have a lot of it. But yes, I'm not saying there's no video courses. I do have, like I said, calls and little 30-minute private calls with people. The blueprint have orchestrated and reinvented me. Thank you, Matthews. Thanks for the comment. Thanks for the feedback, brother. Yes. Academy live trading with you. I mean, I do offer a mentorship, a private mentorship for 2 months. If you are interested, we can talk, we can have a call face to face, we can meet, and we can definitely see if it's something you'd be interested in. Working with me privately, one-on-one, Monday through Friday for 2 months, we will transform your trader mindset and your personal mindset. Okay, I have, by the way, I think only 2 spots left for that private mentorship. So if you are interested, just make sure to text me, or somewhere. Okay, so that is the VIP. Yeah, from time to time I hop on a Discord live. I'm more available for the VIP members. If you have a question and you text me, and I try to answer it as I can. What do we see in your VIP group? I just went over that, brother. I'll show it again real quick. This is the VIP section of the Discord. VIP signals, the setups, daily video outlooks, my personal analysis, self-growth and motivational chat with voice notes reflecting about trading, about life, insider information, I like to call it, like information about my trading strategies, and the possibility to having private calls with me. You know, if you have a question, if you want to have like a little educational session one day, we schedule it, we organize ourselves, and I'll be there for you. Yeah, it's basically the same as Discord. Like the VIP is in the Discord. So it's the private group that I focus more with, and I'm literally like a chat away from you. So yes, these are the 2 offers. The lifetime VIP for 200 bucks and the blueprint for 25 bucks. So if you are in Discord, in the Discord, and you want to apply to one of those offers, please go in the contact chat and create a ticket. Okay, go to create a ticket and you put, and you say, in the ticket you want to say, I don't know, something like, I was on your stream. And you submit it, and that's going to create a ticket, and I'll see that you were in the stream, and I'll make you the offer. I want to join the VIP, but can you show me your last monthly P&L? I really want to join and learn. I'm new to crypto. I don't trade crypto, Pablo. Only gold. And the last month, this was one of the signals I sent on the 17th of July. If I'm not wrong, I only traded 2 times in July. I don't trade every single day. This was a bullish setup that was beautiful. 11th of July, that huge push up. The setup was there, the signal was there. Whoever made the profit from it was there. Where else? We had that short trade also. Yeah, we had a few on July. This is the last one. 17th of July, this bullish move. And this one. Yeah, right there. I think it was 3 trades to be accurate. 3 or 4. But yes, it's not that I'm a swing trader. It's because as a matter of fact, I'm a scalper. I like to go in and out a lot. But I can't send a signal every time I'm trading, because some people might see it a few minutes late. So the signals I send, I make sure that, number one, they are honestly my best effort to make it as, the best trade possible, where all the factors are lining up in my favor. I feel very comfortable with the scenario, and it is in a time window where people have time to enter. Like, look, guys, this is not easy. To send a signal is a big responsibility, because if it goes wrong, I'm responsible in a way, right? I mean, in the end, you are responsible for making your decision to copy it, but I am influencing your idea and your trading. So I cannot send a signal if it's in the 1 minute time frame. I can't. If you're 5 minutes late, you might get it wrong completely. I cannot send a signal just because I have to send a signal every day, because that's forcing trades. So the signals I'm sending are roughly in the 5 to 15 minute time frames that are going to allow you to see it maybe 5 or 10 minutes later, and price still be within a reasonable range of entry, which, by the way, I also send the range of entry. That's something else that I do. Look, if I send, for example, when was this? Right here, this. So entry range and stop loss range. Thank you, Pablo. You see, I do it like that, so that if you look at it 5 minutes, 10 minutes, 15 minutes later, you have to double check if it's within that range. It's safe, right? Or it's best, it's ideal. So I'm sending these signals, not all the time, basically to be careful with it, to avoid over trading and just forcing trades. So it's not that I'm a swing trader, but the signals I send, they're intraday, because it's just better. It has to be that way. Do the deals more often? Um, yeah, I caught you off guard. Yeah, so the stop loss depend, but this was nice because it was this one was nice because it was a nice V-shaped structure. You see that? Um, so so yeah, some of the signals are gonna be awesome. They're gonna be great. Some require a bit more, like this one. The range was a bit wider, but yeah, I obviously try to focus on a good risk to reward ratio. By the way, the market just opened, so let's see how it opened, and it went straight up. So here it opened here. It's reaching for that area that we were showing. It might actually come a bit higher, but let's see. Anyway, all right, guys, we have reached almost the end of this. An hour and 45 minutes. I hope that this made a lot of clicks in your heads. I hope that the offers that I'm making help you and you're eligible for them. um, thanks, Matthew, thanks. So I'll leave these offers for you guys. I know it's Simos and Matthew's in the chat. Omer is already in the VIP. And so yeah, if you don't have any questions, it was a fun time. It was a great session. I appreciate everybody for being here till the end. Don't forget that you're powerful. Don't forget that you are capable of doing everything and anything you set your mind to. Okay? Trust yourself, believe in yourself. Don't give up. Never, never, never give up. Do it, Simos. Message me on Instagram and send me a screenshot of the chat so that I know who I'm talking to, because I get a lot of messages. And be patient, people. Be patient. Great things take time. Okay? Slowly and steadily is better, is more sustainable. I struggle with it sometimes. I get frustrated. I sometimes get angry because it's not natural to not feel. So it is emotional, but we have to try and control ourselves. So keep going. You got this. See you next time. God bless you and your family. And I wish you immense success in your trading and in your life journey. Omer, big hug, brother. And everybody else, Matthew, Simus. I don't know who else might be here. Joey 88. Grace. Hasim. I'll see you next time.